This is another very important tip, and it's basically tactics on staggering your entries. As we mentioned before, if you have a buy line, just above that buy line is a buying area. And one of the reasons why is because a lot of traders might stagger their entries. So they might buy a couple of contracts, it drops a little bit more towards the support line, they buy some more contracts, a little bit more towards the support line, they buy some more contracts, and then if the price comes onto that support line, they buy even more. So they've made 4 purchases all the way down to the buy line. There is a big fundamental problem with doing that, because as we said before, what can happen is the price can come down and not quite hit your buy line and go higher. So what might happen if you do employ that sort of tactic is the price can come down, hit your first price, so you start to buy some contracts or some shares. It comes a little bit lower, you start to buy a little bit more, and then it goes higher, and then you make a profit. So you've made a profit on half of your position because you wanted to buy on 4 occasions, you only bought on 2. So it went down and it went up. You bought the low of the day, which is not a bad thing. However, this is the problem with it, this way of buying. If the market comes down and goes through your line and hits your stop loss, you've bought. You're fully positioned, you've got your whole amount of position and you've been stopped out. Whereas on winning days, what happens a lot of the time is the market won't touch this buy line, it'll go into that area of support and then go higher. So you've made a profit, but only a small profit because it was on half of your position. And this will happen a lot of the time. Now, if you do employ this tactic, the market comes down, takes out the support line, hits your stop loss, that is a big loss. You're going to need a lot of these small little fills and profits from them in order to make up for one big loss. What we would suggest, and certainly what we use, is if we want to start buying at the top of the range, we would buy 100%. So if we want to buy 30 CFD contracts in S&P 500, it comes down to our line, we buy 30 contracts, no messing about. If it goes lower to the line, you'd sacrifice a little bit of points leeway in order to make sure that you're fully positioned. It goes into the zone and then goes higher. We've made a profit on 30 contracts. On a losing day, you buy, yes, there is an argument you buy a little bit higher, but it doesn't matter too much. The price comes down, you've made a loss on 30 contracts. But every single time that you make a profit, you're making a profit on 30 contracts. And at the price of just sacrificing a couple of points, a couple of dollars on the S&P. So always think about that. If you do want to stagger, then what we would suggest is as it dips into the first bit of your range, buy 75% and maybe put 25% at the top of the, or the bottom of the range just above the buy line.